medium-sized entities, also known as SME. What does it mean by SME? From a Malaysian context, SME can be defined as a Malaysian business with a paid-up capital of 2.5 million ringgit or less, and is not affiliated with any company that have a paid-up capital of 2.5 million ringgit. Moreover, the sales turnover also not more than 5 million ringgit per annum. In addition, SME company contains two qualifying criteria, which is manufacturing sector and service industries such as ICT and distributive trade. Now, let's dive into the details. First thing first, in a small company that manufacture products, the sales turnover shall be between 500,000 to less than 15 million ringgit. It also needs 5 to less than 75 full-time employees. On the other side, the sales turnover for companies in service industries is 300,000 ringgit to less than 3 million ringgit, and it should have minimum 5 to 30 full-time employees. Let's get into the next one, which is medium company. For companies that produce goods, they must get sales turnover of 15 million to not more than 50 million ringgit per annum, and the company shall have 75 to 200 full-time employees. Meanwhile, for companies that produce services, the ideal sales turnover is 3 million ringgit to 20 million ringgit annually. It also requires full-time employees of 30 to 75 people.
The first reason SME struggle to get bank loan approved is that SME has poor or insufficient credit history. Having a low credit score can break your chances of getting small business loans. Banks make decisions to lend money based on a business past payment history and credit reports. This helps them determine if you are able to pay them back on time. In the context of SME, the impact of repayment history and credit score can be critical to their financial health and ability to access funding. Here is a deeper explanation of how various factors affect SME credit scores. For the first, default payment, SME may face financial difficulties leading to defaults on loans or trade credit. For late payment, similar to individuals, SME may experience occasional late payments on loans, leases, or trade credit. For court judgments, if an SME is involved in legal proceedings due to unpaid debts or contractual disputes, it can result in a court judgment against the business. For lack of financial history, new or emerging SME often face challenges in establishing a solid financial history. For new SME, one of the significant challenges in accessing financing is the absence of a performance record or established credit history. This lack of financial track records makes it difficult for banks and lenders to assess a business credit's worthiness and reliability as a borrower. New SME typically lack a history of borrowing and repayment, which is crucial factors banks use to evaluate credit risk. Other than that, banks prioritize minimizing risk that lending to SME. A lack of performance record makes it harder for lenders to predict the business future, financial stability, and ability to repay loans.
In addition, collateral is one of the bank's security measures to provide loans to borrowers. It acts as a guarantee of the borrower's wills to repay the loan within the stipulated time. With that, the bank will be able to recover their funds by claiming the collateral. Therefore, collateral is very important to minimize their risk exposure. Usually, banks will choose tangible assets such as property or equipment or vehicle as collateral. This is because its value is more stable and easy to convert to cash if needed. However, SMEs, especially small or new companies, find it difficult to provide the specific collateral due to significant lack of assets. As a result, they find it difficult to get loans from banks. Finally, SMEs also find it difficult to obtain loans from banks due to the perspective of banks were SMEs. That SMEs are risky borrowers compared to largest companies. It is because most SMEs have unstable cash flow compared to large companies. It makes it difficult to SMEs to demonstrate the ability of the business to cover its expenses and repay its loan. In general, SMEs are considered more vulnerable to business failure than largest companies. Because of this, let's focus more on giving loans to largest company, and it makes it difficult for SMEs to get loans.
Next, we will talk about the major purpose by the Malaysian government to mitigate the coming economic slowdown in SMEs. Here, 3 points that we will discuss about. Firstly, tax deduction and cash grants. SME can benefit from increasing tax deduction for expenses related to training, digitalization and research and development. This will help lower the cost of doing business. For example, if the government lower tax rate of 70% to 15% for the first 100,000 of chargeable income, SMEs will saving up of 2,000 from this reduction.
Secondly, digital transformation and innovation support. The government is emphasizing the importance of digital transformation and innovation as key drivers of SME resilience and growth. The government will help with e-commerce support. This initiative to help SMEs expand their online presence and leverage e-commerce platform for broader market access, including training programs and subsidies for digital marketing efforts. Other than that, government help with technical assistance. This program offering technical support and consultancy services to help SMEs integrate new technologies into their operation. Lastly, workforce development and training programs. This to ensure SMEs have access to a skilled workforce. The government has initiated several workforce development and training programs such as apprenticeship and internship programs. It will encouraging partnership between SMEs and educational institutions to provide practical experience and training for students and recent graduates. Besides that, reskilling and upskilling programs, collaboration with educational institutions and industry bodies to offer training programs tailored to the needs of various sectors.
Okay, that's all from us.
Thank you!
Bye!